Pension Trust, your reliable partner in pensions.
My experience working with Axis, I would describe it as extraordinary experience.
Axis has a passion and a strong desire to see pension assets impact the real sector economy.
It's been extremely professional. If you look at Axis's background, they have very well-grounded experience there.
They stand out. And you could see some trust in Axis.
Axis is unique for their preference for alternatives and how pension assets are deployed in the industry.
They have a very robust system that they can deliver on their mandate. We see more improvement. They make adjustments to their systems to reflect the current trends and the regulatory framework of MPRA.
I think from a tech perspective, my personal experience, their portal has basically everything that you need over there. In an era and in a country where there's not a lot that is given in terms of disclosure, you'd realize that Axis goes above and beyond.
What sets Axis apart in the pension industry is their customer-centered activities.
My experience with them, what set them apart is simple: delivery.
The team is very competent, both board and management.
Good afternoon and welcome to the 6th Annual Open Forum for the Axis Pension Plan, brought to you by Axis Pension Trust. As we do every year for the past 6 years, we're here to interact with you, share with you some of the events that has happened in the past year, that is 2024, in respect to the fund. We will take feedback from you as well by way of your questions, and we will answer all of them. But before we jump into the agenda for the day, we would like to take an opening prayer from one of our own in Axis, that is our sister Bridget Corte. Let's give that to Bridget as she joined me to give us an opening prayer.
Let's pray. Father, we thank you for today. We thank you for this session that you have brought us to. We thank you for the sessions ahead. We thank you even for the session we are about to begin. We pray for your spirit to continually guide us, grant us the wisdom, knowledge, and understanding to even know everything that will be discussed here and make better decisions and wiser decisions out of it. We thank you even for a favorable outcome and the successes you will be given to us, even in Jesus' mighty name. Amen.
Let's wait for Bridget. Thank you so much, Bridget. All right. Once again, this is the 6th Annual Open Forum for the Axis Pension Plan, brought to you by Axis Pension Trust. We'll be taking some presentations among other remarks. But before we begin, I would like to introduce some persons here in our midst, here among them being the members of the Board of Trustees. And I'd like to begin by introducing the board chairperson for the Board of Trustees in the person of Mr. Robert Marshall Benin. Can we give it up to him? Thank you. Thank you. Followed by Mr. Efri Owari, who is a member of the board and also as the CEO for Axis Pension Trust. Please, let's give it to him. Thank you. Mr. Matthew Money is also a member of the board and also the Chief Operating Officer for Axis Pension Trust. We can give it up to him as well. Thank you. And the only lady in the board, Madame Dr. Sokanti, please let's give it up to her. We are prophesying that next year by this time she'll have another lady to join her. Now, in the person of a member nominated is Mr. Daniel Sapon, who is also here with us. Please let's give it up to him. Thank you. Thank you. And then our independent trustee, Mr. Samuel Inin, is here with us. Please let's give it up to him as well. The secretary to the board is Madame Louise Dastian. Let's give it up to her. Thank you. And then also, last but not the least, the representative of the audit administrators for the fund. The company is John K. & Co. and the rep on with us here is Mr. Let's give that to him. We'll introduce a few more people. Mike. Thank you. So we'll take the first presentation. We'll take the first presentation from the CEO of Access Pension Trust, in the person of Mr. Efie Owari. As he joins me on the podium, please let's give him a big round of applause to present to us.
Thank you very much, Isaac. Hello, can you hear me? Yeah. Good afternoon, distinguished trustees, executives, and valued contributors. It is a great honor to welcome you to the 6th Open Forum of the Access Pension Plan. This annual gathering is not just a formality. It is a reaffirmation of our shared commitment to safeguarding your retirement savings and advancing the long-term financial security of every contributor that is served by Access. Thank you for joining us today and for trusting us with your retirement savings. The past few years have tested the resilience of our nation's economy, and by extension, your pension fund. From historic inflation and currency depreciation to sovereign debt restructuring, you and I have borne the full weight of a profound economic crisis. Pension assets across the industry grew in CD terms, but when translated into USD, significant contractions occurred between 2021 and 2023. This disparity highlights the painful reality of currency weakness, wealth erosion, and real income declines. Risk, I believe, we should mitigate going forward. In anticipation of this risk, we implemented a defensive investment strategy as early as 2021, anchored on increased allocation to foreign currency assets and equity. And this was designed to moderate the impact of the anticipated local economic shocks on your portfolio. That strategy worked and has served us pretty well. However, in recent times, we have faced new challenges. Between April and June of this year, your investment plans recorded cumulative losses of between 7 to 11%, largely driven by some reversal in exchange gains on our USD denominated assets, as the Ghana cedi appreciated sharply within a very short period. We understand how unsettling this was for many of you. As we issued a detailed circular to explain the situation, and our team proactively increased interactions and engagements with our customers across our channels to provide clarity and reassurances. These efforts were necessary to reaffirm the guiding principle behind our investment decisions and to demonstrate our continued transparency and accountability. Today, Ghana's economic landscape is changing rapidly. With a new government in place and encouraging macroeconomic signals emerging, it's natural that many of you are asking, what's next for your Access Pension Plan? What does our investment strategy look like in this new economic environment for your fund? And that is exactly the reason we are here today. We are here to give you answers that you seek and to provide a platform for direct engagement with your trustees and those who take decisions on your fund. Our investment strategies, Mr. Gideon Amweni, will later outline the strategic direction we are taking for the next economic cycle. He will walk you through how we plan to optimize risk, return, and liquidity in a stabilizing but uncertain economic context. The lessons of the recent economic meltdown we observed in Ghana should continue to guide us going forward. We cannot be passive about our investment risk management any longer. We should also not live with the illusion that government securities are risk-free. After all, we all know now that misguided government actions can destroy the purchasing power of your savings. And that is why it is imperative for us to remain vigilant, well-informed, and proactive in protecting the long-term value of the Access Pension Plan. Thank you again for your participation and for your trust in Access.
Thank you very much, Mr. Ifeowari, for that opening remark, setting the tone for the presentations to begin. So I'll quickly invite the investment strategies at Access Pension Trust, that's Mr. Gideon Amweni, to take us through the performance and then the outlook for this year. Please, let's give it up to Gideon.
Thank you very much, Opare, and good afternoon, and thank you all for joining us for the 6th Annual Open Forum for the Access Pension Plan. We are especially grateful to our cherished participants for making the time to be here. It's my pleasure to take you through the performance of the scheme and share our strategic outlook for 2025. But first, let's take a quick view at the macroeconomic environment on which we operate, because understanding the broader economic context is key to appreciating how our investment strategy is shaped. Ghana's economy experienced a notable rebound in 2024, with real GDP growth accelerating to 5.7% year-on-year against the 3.2% recorded in 2023. This strong performance was largely driven by the industry and services sectors, supported by favorable global commodity prices, and also increased activities in ICT and financial services. Looking ahead, GDP growth for 2025 is projected between 4.5 to 5.5%, underpinned by continued recovery across agriculture, services, and industry subsectors. This steady growth also provides a relatively stable backdrop for long-term pension investments. However, on the fiscal side, 2024 presented significant challenges. The fiscal deficit widened to 7.9% of GDP, up from 3.3% in 2023, approaching the pre-COVID historical average of 8%. This deterioration was largely a result of elevated election-related spending pressures. That said, there have been some encouraging developments. Ghana successfully completed an external debt restructuring, reducing the amount owed to Eurobond holders from approximately $13 billion to $8.4 billion. Consequently, total debt reduced, bringing down the debt to GDP ratio to 61.8%. And these developments are expected to support fiscal consolidation efforts as government demonstrates renewed commitments to the IMF program. On the currency front, the cedi experienced considerable depreciation pressures, especially in the first 9 months of 2024. The year opened with the cedi trading at 11.88 per USD, reaching a peak of 16.42 per USD in November before recovering to 14.77 per USD by year end. And this amounted to an annual depreciation of 19.18% against the 27.81% in the previous year. The foreign exchange stability has relatively, in part, been supported by strong gross international reserves, equivalent to about 4 months import cover. And this buffer was aided by inflows from the IMF, as well as the strategic gold for reserve program. And looking ahead, we expect the cedi to remain relatively stable, supported by continued reserve accumulation. Now, turning to inflation, headline inflation ended 2023 at 23.8%, marginally higher than the 23.2% recorded at the start of the year, and this fell above the central bank's target of 20.1. In response, the central bank adopted a more neutral to expansionary policy stance with the focus on guiding inflation on a clearly downward trajectory without stifling growth. Finally, on the fixed income markets, broad-based yields rose, largely reflecting investor uncertainty around the upcoming political transition and also sentiment towards mixed economic indicators. As a result, we saw yields around the 27 to 30% range, which offered attractive investment opportunities, but also demanded careful risk management. The stock market also posted a positive performance, with the composite index returning 56.2% for 2024. Moving on to the portfolio, the return objective of the Access Pension Plan, as outlined in our investment policy statement, is to achieve a positive real return over a rolling 3-year period and also outperform the benchmark relative to the portfolio by at least 100 basis points. And this reflects our commitment to long-term value creation while protecting the purchasing power of members' contribution. Now, we'll take a closer look at the table here, which shows the various asset classes in which we are invested. And we have, as per the NPRA guideline, the maximum allocations, our actual allocations as at the year end, investment income end, and then 2024 year-end holdings against the 2023 year-end holdings. And the key observation here is government securities remain the anchor of the portfolio, which constitutes about 64% and also delivered over 55 million in income. When you look at also listed equities, it also did contribute significantly to investment income and more than doubled from 27.5 million to about 51.8, reflecting strong market performance. Corporate bonds and collective investment schemes also recorded strong year-on-year growth, supporting our diversification. And then the low allocation to money market instruments and high balance in cash and receivables reflect tactical positioning in response to short-term market opportunity and also liquidity needs. Alternative investments, though a small portion of the fund, delivered modest gains. We currently do not have holdings in the LGSA asset class. These holdings were consolidated with government securities during the domestic debt exchange. And overall, this composition demonstrates our disciplined and diversified approach to portfolio management, balancing risk and return while staying within the regulatory and policy limits. I would move on to portfolio performance. And this table we see here shows annualized returns for 2024. The compounded annual growth rate for the past 3 years the past 5 years, since inception, compounded annual growth rate, and then cumulative returns since inception. I must also say that we maintain the constraint fund structure. So in that, we have the moderately aggressive retirement plan and the conservative retirement plan, which reflects the average return on the portfolio. Now, the key observations here, we did record very robust or strong performance on the moderately conservative retirement plan in 2024, 27.06%. The conservative retirement plan also retained a very good return of 23.31%, averaging at 25.18, which exceeded our inflation benchmark of 23.8%. Not just the annualized return, if you also look at the since inception return, that also reflects an average performance of 20.98%, beating the inflation benchmark of 17.8%. And then also throughout the 3-year period and the 5-year period, average returns largely exceeded the inflation benchmark. We must also acknowledge that 2022 inflation did spike to above 50%, and that's what's reflecting in the 5-year and the 3-year period. If you look at the cumulative returns also, over 800% average return since inception significantly outpaces the inflation benchmark. And this also reflects how we are delivering value to our members and also providing and securing their purchasing power. And this aligns with our long-term investment objective. I would move on to our strategy, but before I do, I would like to just highlight some key factors within the economic landscape that are shaping our strategy going forward, shown on the slide. We acknowledge that there is rapid disinflation, which is steering inflation back to the central bank or the Bank of Ghana targets. And this is resulting in rising real returns or rising real interest rates, a development that has helped restore investor confidence. The strong GDP growth also continues to support corporate profitability and earnings momentum, particularly in some key sectors. Yields are also declining sharply, especially on the short end of the curve, leading to some steepening in the yield curve, and this trend is positive for duration exposure or taking exposure to longer dated instruments. And then we've also seen that the cedi has appreciated, which is also reducing our pressure of investors to dollarize their portfolios. Now, moving on to the various asset classes, the green highlights or the green box indicated under the outlook segment shows we have a bullish preference or bullish position for that asset class. The yellow shows we are neutral but open to opportunities that may emerge. The red shows we hold a bearish and defensive view. Now, on equities, we hold a constructive outlook. We acknowledge the improving economic fundamentals and continued disinflation, stable currency forecasts bodes well for companies' earnings. And so because of our bullish position on equities, we plan to increase our allocation to high quality stocks and sectors that are likely to benefit from the emerging improving fundamental trends. On government local currency bonds, our strategy here is anchored on diversification, and we remain agile to selectively capture opportunities from high yields that we may see on the market, especially on the long-term end or the medium-term end segments of the yield curve. Treasuries also still remain part of our strategies. It remains largely a liquidity management tool for us. The Eurobond also constitutes an important asset class for us. Currently, our strategy is to maintain exposure through mutual funds so that we are able to diversify our holdings to include other African sovereigns. On corporate bonds, it helps us also implement our diversification strategy. And our strategy here is to continue to hold exposure to high quality issuers who have strong corporate credits underlying effects. On fixed deposits, we plan to maintain also exposure to high quality banks to support our diversification strategy outside government securities. We hold a defensive posture, but we keep reflecting on current emerging trends in the economy, on local government and statutory agency securities. On alternatives and commodities, our strategy here is to selectively increase our allocation, and we believe we can capture some illiquidity premium here to, provide or shore up for the declining yields that we are experiencing on the fixed income market. So overall, I would say that our multi-asset framework enables us to remain flexible and forward-looking, and we are also able through that to adapt to emerging events or economic events. We continue to prioritize capital preservation, income generation, and prudent diversification, which aligns with our long-term goals of the fund. Thank you very much.
Thank you very much, Gideon, for the presentation and telling us what has been happening within the year and even the outlook going forward. At least we are all happy to hear that in spite of all the challenges, the scheme outperformed inflation in the year 2024. We will take another presentation, which is a presentation or the trustee report, and it will be presented by Mr. Robert Benin, that's the chairman of the Board of Trustees. Please let's give him a big round of applause. Please let's do it better until he gets here. Thank you. Thank you.
Thank you very much. Good afternoon, members of the Access Pension Plan. On behalf of the Board of Trustees, I extend our heartfelt gratitude for the trust you have placed in Access Pension Trust to manage your valuable savings. Your participation in the Access Pension Plan reflects not only your dedication to long-term financial security, but also the confidence you have in us to serve as stewards of your financial future. We recognize the profound responsibility this entails and approach our role as fiduciaries with the utmost care, diligence, and integrity. Our unwavering commitment is to serve as faithful stewards, providing the guidance and support necessary to help you achieve your retirement aspirations. Thank you for allowing us to be part of your journey. Your trust inspires us every day, and we remain steadfast in our mission to serve you with excellence. We're delighted to welcome you to the 6th Annual Open Forum for the Access Pension Plan. This forum remains a vital platform for transparent communication, offering valuable insights into the performance and strategic direction of our personal pension plan. In my address for the year under review, I will explore key topics that shape our investments and financial well-being, including an analysis of the global economic landscape in 2024, the macroeconomic context within Ghana during the same period, and a comprehensive review of the scheme's asset positioning and returns for 2024. Our strategic direction for 2025 and beyond has been provided by our Chief Investment Officer. Additionally, I'll share an exhortation on the importance of investing, the power of compounding, and the value of staying invested through market cycles, offering encouragement as we navigate the complexities of the recent economic environment. In times of uncertainty, our resolve to uphold a sound investment strategy and prudent decision-making remains stronger than ever. Global macro events in 2024. The global economic landscape in 2024 was characterized by a delicate balance between resilience and uncertainty, shaped by a confluence of geopolitical tensions, monetary policy adjustment, and market dynamics. The year began with lingering effects from the Russia-Ukraine conflict and Middle Eastern instability, which continued to disrupt energy and food supply chains. These geopolitical flashpoints were compounded by rising tensions between US and China, particularly as trade negotiations intensified ahead of the US presidential elections in November. The prospect of a Trump administration returning to power with its associated tariff threats casts a shadow over global markets, contributing to volatility in equity and commodity prices throughout the year. And we've seen this effect linger even into 2025. Despite these challenges, the global economy demonstrated surprising resilience. The United States, as a key driver of global growth, saw its economy expand by 2.8% in 2024, supported by robust consumer spending and a tech sector rebound. The Central Bank of the United States, the Federal Reserve, after maintaining a contractionary monetary policy stance in early 2024 to combat inflation, pivoted in September with a 0.25% rate cut as inflation reduced. Other major economies like Europe and Japan also adjusted their policies to encourage growth, as Europe's factories struggled and Asia's recovery from COVID remained slow. The MSCI World Index, a broad gauge of global equity performance, recorded a strong return of 18.5% for the year, recovering from a turbulent 2023 marked by recession fears. Similarly, the Bloomberg Global Aggregate Bond Index, the benchmark index for global bonds, returned 3.1%, benefiting from declining yields as inflation moderated globally to an average of 3.2% by year-end, down from 6.8% in 2023. Commodities played a significant role in 2024's economic narrative. Gold rallied by 15.2%, driven by safe haven demand amid geopolitical risk and a weakening US dollar, which depreciated by 3.5% against a basket of currencies. Oil prices remained volatile, averaging $85 per barrel, as OPEC cut production to keep prices from falling too low. Emerging markets, particularly India and Brazil, outperformed with GDP growth rates of 7.1% and 3.9% respectively, fueled by domestic consumption and infrastructure investments. However, China's growth slowed to 4.7%, hampered by a property sector crisis and reduced export demand, underscoring the uneven recovery across major economies. Market volatility was a recurring theme in 2024. The S&P 500 dropped by 5.2% in August due to profit-taking after the strong first half, only to rebound with a year-end gain of 21%. This resilience highlighted the adaptability of global investors who shifted allocations toward defensive sectors like healthcare and utilities, alongside alternative assets such as real estate investments, which returned 8.9%. The year underscored a global economic theme of cautious optimism, where central bank policies and geopolitical developments dictated market trajectories, setting the stage for a pivotal 2025. In Ghana, our macroeconomic environment in 2024 reflected a cautious stabilization following severe economic turbulence of 2022 and 2023. The year marked progress under the International Monetary Fund's extended credit facility with a second tranche of $600 million disbursed in June 2024, bringing a total support to Ghana to $1.8 billion. This assistance, coupled with domestic fiscal consolidation, helped stabilize inflation pressures within a band of 23.2% at the start of the year to 23.8% by December. While this represents successful moderation from 2022's peak levels, inflation remains significantly elevated above the central bank target of 8%. The central bank maintained its monetary policy tightening stance with a policy rate of 29% through mid-year before a modest 200 basis point cut to 27% in August, reflecting confidence in the disinflation trend. And this trend has continued into 2025. Interest rates on short-term government securities eased slightly, with the 91-day Treasury bill rate declining from 29.36% to 27.5%, and the 364-day rate falling from 32.49% to 30.2%. This adjustment was influenced by the domestic debt exchange program, finalized in 2023, which restricted government borrowing to short-term instruments, limiting liquidity in the medium to long-term bond market. The cedi's performance improved marginally, depreciating by 19.5% in 2024 compared to the 28% in 2023, supported by a 1.2 billion boost in cocoa export revenue and IMF inflows. However, structural weaknesses persisted, including a fiscal deficit of 6.5% of GDP and a lack of foreign portfolio investment due to the absence of robust long-term bond market, reinforcing skepticism about the cedis as a store of value. Economic growth rebounded to 5.9% in 2024, up from 2.9% in 2023, driven by agriculture and services, though the industrial sector lagged due to high energy costs and supply chain disruptions. On your scheme's performance in 2024, against this challenging yet stabilizing macroeconomic backdrop, Access Pension Plan delivered an average return of 25.18% across its constituent funds in 2024. This performance reflects our proactive asset allocation strategy, which capitalized on global and local trends. We maintained a significant weight in US dollar assets, including the Ghana Eurobond, which benefited from 19.5% depreciation of the Ghanaian cedi, and the ABSA New Gold ETF, which returned 34.7% in line with gold safe haven rally. Domestic allocations to government securities were reduced to 65% of the portfolio, down from 79% in 2023, mitigating the impact of high local interest rates and currency depreciation. Our equity exposure, primarily through the Ghana Stock Exchange, also contributed to the overall scheme performance, buoyed by gains in banking and consumer goods stocks. Total assets under management, reflected in the scheme's net asset value, grew to 426 million Ghana cedis by December 31st, 2024, an increase of 36% from 314 million Ghana cedis in 2023. The 25.18% return positioned the schemes relative to inflation benchmark of 23.8% in 2024. While this outcome reflects the challenges of a volatile year, our diversified approach mitigated downside risks. The shift towards alternative assets and currency diversification proved effective, though the constrained Eurobond market limited yield upside opportunities. Looking ahead, we will continue to refine our strategy to balance yield, liquidity, and growth, ensuring alignment with members' long-term retirement goals. Members, please permit me to exhort you on the importance of investing, compounding, and staying invested through market cycles. The economic turbulence of 2024, though largely behind us, reinforces the timeless importance of investing, the power of compounding, and the discipline of staying invested through market cycles. Investing is a journey of patience and resilience, not a race dictated by short-term fluctuations. The volatility caused by geopolitical tensions, currency movements, and interest rate shifts can test confidence, but history demonstrates that markets reward those who remain steadfast. For instance, a 10,000 Ghana cedi investment in the Axis pension plan 5 years ago, compounding at an annual rate of 20% between 2019 to 2023, would have grown to over 24,800 Ghana cedis by 2024, despite periodic downturns. Withdrawing during a dip season locks in losses and forfeits the recovery that follows. Compounding is the engine of wealth creation, turning small, consistent contributions into significant sums over time. As Board of Trustees, we will encourage you, our members, to view market opportunities as challenges, as opportunities to strengthen resolve. Just as a farmer persists through seasons of drought to reap a bountiful harvest, investors who endure volatility with a long-term perspective will see the fruits of their discipline. Let us remain committed to our investment and our retirement goals, trusting in the Axis pension plan strategy to navigate storms and deliver sustainable growth as we have done. Thank you very much.
Thank you very much, Mr. Roberts Benin. The clap coming from the board side was louder than those of the members. Thank you. So it's very, very inspiring, and we are very confident into the future. I'm happy. Some of the favorite ones that I picked from Mr. Chair's presentation: compounding is the engine of wealth creation, turning small, consistent contributions into significant funds over time. And I also heard that markets reward those who remain steadfast. So those who would not be follow their, maybe the fact that there are fluctuations to withdraw, but will remain steadfast, would definitely be rewarded by the market. Thank you, Mr. Chair, for that presentation. We'd like to remind you that please keep your questions coming in the chat box. We'll address all of them before we leave here. We'll take another presentation, and it will be done by the auditors of the scheme, that is John K. and Co. We have Mr. Gilbert Lomofio in our midst. I'll hand over the microphone to him so that he can take us through the 2024. Thank you. The board is doing better with the clap. I think we should do.
Yeah, good afternoon, ladies and gentlemen. And I proceed to present to you the independent auditor's report on the financial statement of the Axis Pension Plan for the year ended 31st December 2024. And I'll begin with the opinion. We have audited the financial statement of Axis Pension Plan, which comprise statement of net assets available for benefit at 31st December 2024, statement of changes in net assets available for benefit, statement of cash flows for the year ended, and a note to the financial statement, which include a summary of significant accounting policies and explanatory note. In our opinion, the financial statement gives a true and fair view of the financial position of the scheme at 31st December 2024, and its financial performance and cash flow for the year ended. In accordance with international reporting standards, in the manner required by the National Pensions Act 2008, Act 766 as amended, and the Occupational and Personal Pension General Regulation 2011 LI 1990. Basis for opinion. We conducted our audit in accordance with international standards on auditing. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the financial statement section of our report. We are independent of the fund in accordance with the International Code of Ethics for Professional Accountants, issued by the International Ethics Standards Board for Accountants, and we have fulfilled our other ethical responsibilities in accordance with the code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Key audit matter. Key audit matters are those matters that, in our professional judgment, were of most significance in the audit of the financial statement for the year ended 31st December 2024. These matters were addressed in the context of the audit of the financial statement as a whole and informing our opinion thereon. And we do not provide a separate opinion on these matters. We have determined the following as key audit matter. Accounting for income and asset recognition from Eurobond exchange. During the year under review, the fund participated in the Eurobond exchange program, exchanging old bonds with face value of 150 million for new bonds with face value of another 150 million. The transaction resulted in a total net income of 7,202,359, comprising a notional coupon income of 3,193,897, accrued interest of 2,129,265, and consent fee of 2,165,354. This matter was considered significant to our audit due to the following: the complexity of accounting for Eurobond debt restructuring, which involves significant judgment in determining the fair value of the instrument received and the appropriate timing and classification of income recognition. The unusual nature of the transaction, including the notional coupon, which had a direct impact on the fund's income. The material impact of the transaction on the fund's financial performance and position. How we dealt with this matter in our audit. We reviewed the terms and conditions of the bond exchange offer and associated accounting treatment adopted by the fund. We evaluated the fund's recognition of notional income and accrued interest to determine compliance with applicable financial reporting framework. We also assessed the valuation of the new financial asset recognized post-exchange, including the reasonableness of input and assumptions used. We verified the notional coupon and ensure its proper disclosure in the financial statement. We tested journal entries and reconciliations related to the transaction to confirm the accuracy and completeness of the recorded amount. We also assessed the adequacy of the fund disclosures in the financial statement concerning the transaction. Other information. The trustees are responsible for the other information. The other information comprises report of the trustees, the statement of trust responsibilities, which we obtain prior to the date of this report. The other information does not include the financial statement and our auditor's report thereon. Our opinion on the financial statement does not cover the other information, and we do not and will not express an audit opinion or any form of assurance conclusion thereon. In connection with our audit of the financial statement, our responsibility is to read the other information, and in doing so, consider whether the other information is materially inconsistent with the financial statement or our knowledge obtained in the audit or otherwise appears to be materially misstated. If based on the work we have performed on the other information obtained prior to the date of this report, we conclude that there is a material misstatement of this other information, we are required to report that fact. We have nothing to report in this regard. If you permit me, ladies and gentlemen, I would like to skip the responsibilities of the trustees for the financial statement and those of the auditors for the audit of the financial statement section of the report, and move on to read to you report on other legal and regulatory requirements under the National Pensions Act 2008, Act 766, as amended, and the Occupational and Personal Pension General Regulation 2011, LI 1990. We have obtained all the information and explanation which, to the best of our knowledge and belief, were necessary for the purpose of our audit. In our opinion, proper books of account have been kept by the scheme so far as appears from an examination of the book. The statement of financial position, statement of net assets available for benefit at 31st December 2024, and the statement of changes in net assets available for benefit are in agreement with the books and of account as well as the returns. The audit opinion as I presented to you was signed for and on behalf of John K. & Co., which practice number is ICAG/F/2025/128 by Mr. Gilbert Ajay Lumufo, which practice number is ICAG/P/1417 and is dated 30th April 2025. Thank you very much for your attention.
Thank you very much, Gilbert. We attempted clapping for her. Please let's complete it. Thank you. We have a few questions. The first one goes to the trustees, and then Gideon and Pakufe will also take turns to answer their questions. Somebody wants to know when the auditor for the scheme will be rotated. I'm quoting the person's exact words, so I'd like to throw that to the word is rotated, so it means maybe the person wants Junkie to go to somewhere else. So, okay, Mr. Matimani will do that for us. Let's give it up to him as he comes. Thank you.
Thank you. I suppose the person asking is either an accountant or a corporate governance practitioner. The NPRA has rolled out a couple of corporate governance directives, which we are implementing. And so as part of the provisions, when auditors need to be rotated, I think it's 5 years? 6. Okay. So yes, we are going to rotate or change our auditors. We have a window within which the compliance will start. So I think maybe for next year, we should be expecting another auditor. But I might want, as a practitioner in the pension space, that the longer people acquire knowledge, the more efficient they are in knowing where to check, right? And so if you send me to ask questions about a car factory, I have to start learning, right? But someone sufficiently experienced knows where to check, where the garbage is likely to be. So thankfully, we are having a number of experienced auditors over the period. So we would do the rotation somewhere next year, by the way.
Thank you, Mr. Mani. We can do it for him as he takes a seat. I will now invite Mr. Pakufi Ankuma, General Manager for Access Pension, to answer some questions. Then Gideon will. Okay, so Gideon will take the following questions, and then during Pakufi's presentation, he will add all of them. So the first person is saying that I saw a reduction early this year after the contribution from the bank were credited. So instead of my balance increasing, it rather decreased. Can you please explain? And the next question is, why did the negative returns erode principal contributions? Okay, so Gideon, I believe you get the question.
Thank you, Opare, and thank you for the question. So yes, we do acknowledge that members' balances fell sometime this year, and it's largely because we experienced some currency appreciation in the city. So the fund holds some USD investments. The USD investment, because there's a city fund, we always have to convert it back to cedis. So if the USD, the city dollar exchange rate was, let's say, 16, and that was the value as at maybe 2 days ago, and today we wake up and the value is, let's say, 10 cedis, the 16 cedis, which we have to use to convert the USD back to the dollar, now has become 10 cedis. And so that difference is what caused the fall. It's unfortunate that you feel your principal contributions have been eroded. But let me explain to you and assure you that your fund value is determined by the number of units you hold. So every contribution that comes into the fund purchases some units for you. So actually, if you study your statements, this contribution which came in, which you feel was eroded by the losses, actually got you more units in the fund. So in terms of the number of units you hold, you would realize that it has gone up in terms of numbers. If your fund value also is determined by the units you hold multiplied by the fund price, which you also find on your statement. So your principal that came in, yes, in nominal term, the losses, if the losses were significant and you haven't accrued enough interest, it would look like your principal contributions have been eroded. But if you look at your contributions that are coming in and the units they are getting for you, then you realize that your principal contributions are intact and rather getting you more units in the fund. Should things change and asset prices increase because you hold a significant number of units in the fund or your units have increased because of the lower price of the fund, you will also benefit from a fast increase in your portfolio value. So I hope that answers it. Thank you.
Gideon, just stay with me for one last question. Someone is asking that as an investment institution, when the future is uncertain, there should be strategies to mitigate unforeseen losses. So in the light of this recent event, what is Axis' strategy to target future losses?
To mitigate future losses, FX losses. Yes, so we are always actively monitoring the economic landscape to be able to detect some of these events that would feed into portfolio performance. However, it's not everything that we are able to detect. The most important thing is we always ensure that whatever event is taking place is not just a temporal and a short-term effect. It feeds into the long term. Either than that, we are always going to take up actions that in the long term will not benefit members. So we are currently reviewing our strategy. I've indicated what we are going to do. We are actively also monitoring. And so if any of these developments feed into the long term, we'll reflect it in our strategy going forward so that members always are protected. I hope that answers it too. Thank you.
Thank you very much. We can give it up as he takes his seat. Thank you. So Bagovi, a few questions. Let me just pick a few. So somebody would want to know if Axis can assist the scheme members in buying properties like car, motors, or if that is outside, then he also like to know. There's also a concern about controller contributions and the delay thereof, what can be done about it. Somebody also wants to know, okay, someone wants to know in the event of death, what must beneficiaries do? And then the last but one, can somebody living outside Ghana contribute to the personal pension and what should they do? And there's a tier 2 question, but I think we can address. Someone is asking, can you do a partial withdrawal from your tier 2? If yes, what's the procedure? So as part of your presentation, thank you.
Okay, thank you very much. Before I jump into answer these questions, I just want to add to what Gideon said. So for pension schemes or any investment scheme, when it comes to risk management, it's like building on an earthquake-prone area. You know that there's going to be an earthquake, but you don't know when. That is the risk we are looking at. So how do you manage to make sure that there's a place to live, you have adequate return to sustain you? So in trustees' decision-making investment strategy, what we try to do is to make sure that no matter how much earthquake is going to come, we use the building blocks to make sure that no lives are lost during an earthquake. So just by way, think of it in that manner when you talk about risk management. Now to the questions at hand, properties. It's a very valid question. It's something that we have thought very deeply about. In fact, 2 years ago, we came to you with a service provider, First National Bank, FNB Bank. The time rates were ridiculously high, so we didn't think it was fair to take advantage of that partnership. I'm happy to say interest rates are gradually edging towards the lower bands. So we will definitely come back to you, but it is an opportunity. We have something that we want to bring to you. It may not be exclusive to FNB. We are looking at other options, but beyond Axis's options, you as an individual definitely can use your pension or your tier 3 account, your personal pension account, walk into any bank at all and say, I have a tier 3 account. Can I access a mortgage from you? Definitely you would be listened to. So facilitate it, help you with all the necessary documents for it to, but for us to build a house for you, no, we are not allowed to do that. So if that is what you're looking at, please, I'm sure you have the capacity to build your house, but we can help you facilitate it for you. Controller and Accountant General's Department. It's a very big problem. For those of us who have our payroll contributions coming from controller, please, I'm sure it's not just Axis. I'm sure it's not just your personal pension scheme. It goes beyond your personal pension scheme, even for your loans and all that. For those of us who are working at controller and accountant general, we use this platform to beg you. Let's do better and try to make contributions come in on time. I know there is a was a liquidity problem, but I'm sure as time goes on, we can go back to our old days where we used to contribute or pay contributions on time. Death benefits. Once you pass away, your beneficiaries have access. So all they need to bring is to either to visit our offices and submit proof of your death, and then the application forms. Of course, if they are not nominated beneficiaries, they need to bring an LA. If you don't have any nominated beneficiaries, they need to bring an LA or the necessary documents. If they were nominated as beneficiaries, they bring the necessary documents, including the probate will and everything, and then we pay out. But really, by the pensions law, tier 2 and tier 3 benefits that you have, only those who are nominated by the contributor has or will have access. So I would use this also to encourage you, go on our online portal and nominate the beneficiary. Don't stress your beneficiaries when you pass. God forbid, we all pray we do not die, but don't stress your beneficiaries when you pass. Once you name those specific people who you want to take your money when you pass, it is very easy for them to have access to it when you pass. We are not praying for death. We all want you to go on retirement and enjoy your own money that you suffered to build. Oh, yes. Thank you very much, Mr. Chair. Additionally, we provide you a free life insurance cover as a member of the Axis Pension Plan. So once anything happens to you before retirement, Holla Life has been magnanimous enough through a partnership we have with them to pay you a life cover of 5,000 cedis. It may not be much in these times, but trust me, it saves a lot during those hard times. So beyond your pension benefits you'll be getting, there's also a free life insurance cover, which will be paid out to your beneficiaries to augment funeral, basically. I'm in the diaspora. Can I make contributions? Absolutely. As much as we encourage monthly contributions, we do give you a chance to make voluntary contributions. So you can go into our online portals and use your Visa or MasterCard to make payments. We are in the process of bringing out some automated debits on Visa, MasterCard, and all those fancy PayPal, Apple Pay, all those fancy things. We would come back to you on that. But for now, you can do voluntary contributions using your Visa or MasterCard. Tier 2 contributions, can I make withdrawal? I think the simple answer is no. on that note, I would go straight into a short, just to give you some updates on what we've been doing for you. So at Actors, we've been thinking very critically. We've seen a lot of people send emails. They call our call center, they want to update their details. In the era of data confidentiality, we've now provided access to you in the comfort of your home. Just go onto our online portal, please, not our mobile app, our online portal. Just go on our website, accesspension.com, and then go to the portal. Once you go to the portal, go to your member dashboard and member details, sorry. You go there, there's an edit button there for you to edit your information. You could upload, so you can update your beneficiaries. You could also update your Ghana card number, your SNET number, your phone number, email address, or even your Ghana Post code. So all this can be done for you right there. I'm sure you've been a member of the Access Pension Plan for a few years. You've been quite excited about it. Why keep the news to yourself? We want to use this opportunity to encourage you to refer a friend. Somebody out there who hasn't heard of this story wants to know. So please give us somebody, go on our mobile app, go on our online portal and refer a friend. We will get in touch with that friend so that a friend also joins you in this beautiful journey. We also, over the last few months, introduced withdrawal, online withdrawal, to ensure that nobody takes money from your account without authorization. Payments out of the Access Pension Plan goes only to your bank account. Please note that we are not going to make any payments to a third-party account. We've seen people say, oh, I live in America. Now I don't have an account in Ghana. Unfortunately, you need an account in Ghana for us to make payment for you. I want to stress that payment out of the Access Pension Plan goes to only you, unless in circumstances that you die. You are no more around, and we are processing it as a death benefit. So please make sure you have an account in your name, just like you have it under the Access Pension Plan. And then also, it's because you have an account in your name, which is a Ghana card registered account. We also need you to update your Ghana card with us so that we have it on record to make sure that everything is seamless. It's sometimes very painful when people say, oh, when you are taking my money, you didn't ask me for all these things. Please, I'm telling you now, so that if you don't want us taking your money, we stop taking your money. But before you can access your money, please make sure you have an account in your name for us to make payments to. I would pause here, and then I'm sure at AOB, I'll come in again. Yes, there are incentives, so please refer your friend. We have some incentives for some very exciting incentives, which I'm sure as we go on, we'll share with you. But of course, we won't leave you hanging. So please refer a friend, and then let's make money together in the long run. Thank you.
Thank you, Bakofi. Please stay with me. Whilst you were presenting, we got some 2 questions for you. And one of them is saying that one of the main risks for a scheme like this is the collapse of the corporate entity. How are members protected should Access collapse? Is Access part of the deposit protection scheme? At the first question. The second one is maybe a suggestion. The person wants to know if members can be restricted from withdrawing so that it can help them discipline. So instead of allowing people to withdraw with the penalties and things, if members can be restricted so that it can enforce some discipline on members. Thank you.
Okay. Oh, okay, sure. Thank you very much. So the pensions law, which regulates pension schemes, really safeguards you, the individual. As you may know, pensions is referred to as income of last resort. So the idea is that however bad the economy is, there should be some safeguard to make sure at least you get something to take back home. I can assure you we are not part of the deposit protection scheme as a pension scheme. However, the safeguards is more than enough to make sure that you have adequate fallback in case. I don't want to bore you. I think I've spoken in my face a lot. Let me allow the custodian, who is the sure bet by the law, they hold the assets on your behalf. So I want them to just speak so that it doesn't just come from me. In this case, we have our custodians, Zenith Bank, who is represented by the head of custody, Mr. Alvin Abafoli.
Okay, that's okay. All right, good afternoon. Good afternoon to those who are listening online. So with regards to the question about how safe your assets are, just like Mr. Parkofi said, we are the custodians, so we are keeping the assets in trust on behalf of members. For the pension schemes that are registered with MPRA, I'm sure you are aware that it's more or less like there are three main stakeholders who are involved. There's the trustee who handles most of the administrative functions, the fund manager who is responsible for giving the investment advice, and the custodian who is the one who is actually receiving the contributions and keeping those assets in trust on your behalf. So in the event that Axis goes down, which I think was what the question was, which we know would never happen, I can assure you that your assets are still intact. In that event, there will definitely be maybe a receiver or somebody who will take over the administrative functions, but the assets are with the bank, the custodian, and they are kept in trust. Yeah, and about the deposit insurance, I think as a bank, we have an insurance which covers all cash, including contributions. It would not cover investments that have been moved out, okay, because the bank was not the one that directly asked for the investments to be held in treasury bills and so on. But whatever cash is sitting in your accounts will be covered under the deposit insurance. Okay, thank you very much. Yeah. Someone is asking, Mr. Freer, sorry, was asking, what if the bank collapses? Again, Zenith Bank, we also believe that that would never happen. We've been in Ghana for 20 years now. We're celebrating our 20th anniversary this year in September. Okay, but in the unlikely event that that happens, like I said earlier on, the assets are kept safely. We have all the documents, all your treasury bills, bonds. We've opened unique central security depository accounts for the scheme. And that has got nothing to do with the bank's own assets anyway. But again, a receiver will take over. There's an insurance that will cover all deposits that are sitting in the accounts. And like I said, it will not affect the assets that have been placed with other institutions. So that is not going to happen. All your investments will be safe. Thank you.
Thank you very much, Alvin. Thank you very much. So in effect, the deposit protection scheme only covers the cash component of the pension scheme. But really, a pension scheme is not looking at cash. You see the cash value on your accounts, on your statement, but really it's all in investments. And that is where we look at. So please, I hope your question is answered. Can we restrict withdrawals? I like such questions. It excites me. It's something that we have thought about. We have certain penalties for early withdrawals less than 3 years, withdrawals less than 5 years. We believe it's not restrictive enough. We are in the process of introducing a bit more restrictive penalties restrictive penalties, basically, so that it deters members from withdrawing. But I think for anybody who has decided to do their personal pension, I think you are responsible enough to know that this is not a bank account for it to be withdrawn on a monthly basis or on a yearly basis. So please, if you are not disciplined enough, I'll encourage you. The discipline or the thought of being disciplined enough to join the personal pension scheme to sustain you, to keep your money in the fund for the objective that you set out to invest in. Thank you.
Thank you, Bakofi. Can now do it for him as he takes a seat. Thank you very much. So we have a last question here. We'll take, so So Gideon will help us answer that. What is your anticipation of the impact of US tariff on various countries, especially Ghana, and on the Access Pension Plan assets holding in general?
Okay, thank you. So the impact on Ghana as a whole is quite minimal because we export just around, let's say, 3% of our GDP to the US. And we also fall within the 10% bracket. So we don't expect much impact on the country. For our portfolio, we also have exposure to some global securities through collective investment schemes. And so far, anytime new measures have been announced on tariffs, markets have reacted, investors have reacted in ways that markets have been very volatile. But all the time, markets bounces back quickly. And so in terms of our portfolio, because we also hold just around 1%, the impact shouldn't be much. We would see some volatility in the collective investment schemes that have exposure to the US, but largely this should be mitigated by inflows from other asset classes. So the impact should be quite minimal. Thank you.
Thank you very, very, very much. All too soon, we're moving or getting closer to the end of the program. Just a quick reminder that this is the 6th annual open forum of for the Access Pension Plan, brought to you by Access Pension Trust. We want to assure you that once we have live, the 7th edition will come off. That's in 2026. You can watch. Okay, you can watch. You can watch out for that. We'll take an LB from our general manager, Pakofi Ankuma, and then we will be wrapping up. Thank you.
Thank you very much, and so I'm happy to say we've been thinking about our scheme members. We started this personal pension scheme, the Access Pension Plan, somewhere in 2014. And over the life of the scheme, we've seen members who contributed at the beginning 50 cedis. That was the minimum contribution amount. That amount has been maintained by a number of them because we did not provide for the people to adjust their contributions in line with inflation as the years went by. So 50 cedis, some 10 years ago, really, there's no more 50 cedis now. Now, looking back at that decision, we noticed that if you had contributed 50 cedis, right, since 2015, and you've never decided to adjust your contributions, and you've never also withdrawn before, by the end of this year, by the end of last year, sorry, you'll be taking home about 20,029 Ghana cedis over a 10-year period, just 20,000 cedis. If we had taken the decision to adjust your 50 cedis contribution on an annual basis by just 10%, you'll be taking home about 35,000 cedis. That's a whopping 76% in value over what you would have taken home if you never adjusted. We believe that for preservation of your value, 35,000 cedis versus 20,000 cedis is worth more. 35,000 cedis is worth more. And for this reason, we want to, by the end of this year, introduce an automatic inflation adjustments to your contributions. So basically what we want to do is that on an annual basis, a minimum of 10% would be automatically adjusted to everybody who contributes to the personal pension scheme. As much as it's automatic, we also give you the chance to opt out if you do not want to. We believe this is a gesture to help improve your retirement journey, preserve your money that you do not want. So even better at 10% that we are proposing. So there's opportunity for you. We are going to circulate some FAQs. We are going to make the link available to you. Hello? Yeah. Hello? Okay. So that you can take a decision on how you want to. If you decide to go quiet or keep mute, we would adjust automatically, and then you will see its credit to your accounts going forward. We would have a webinar, a special webinar for this, so that you can ask all your questions. But I just wanted to introduce this topic to you, and I'm sure you and I agree it's a very laudable idea, and you'll be very receptive to it. On that note, I'll say thank you very much.
Thank you, Kofi. So coincidentally, two questions came concerning that. Two people, one was saying that the contribution has stayed 100 for the past 5 years, and one was also asking plainly for an inflation adjustment. So this is in line with some members' expectation, but we're also happy to see, like Kofi said, that if this is not something that will work for you, you can opt out. If this is something that you want, but you want to do more, you can increase the percentage from the 10% to something that works with your plan. We've come to the end of the annual open forum for the Access Pension Plan. We'd like to say a very big thank you to the Board of Trustees for what you do for the fund. Thank you for your direction, for steering the activities of the fund. To all service providers, we want to say a big thank you. To the media team and everyone that has played a part, we want to say thank you for being part of the 2025 Annual Open Forum. And most especially to you, the members of the Access Pension Plan. This could not have been possible without you, for believing in the fund since 2013 all the way till now, and even for spending the past few hours with us. We appreciate you for this. We want to assure you that next year will come your way again with the 7th edition in 2026. Thank you so much. As we wrap up, we'll take the closing prayer, and I'll kindly ask that we bow down our heads so that as we began in prayer, we can also end in prayer. Please, let's pray. Our most gracious Lord, we thank you. We're grateful for the gift of life. We thank you for the time we've spent here. You started with us and we are ending very well. Lord, we are grateful. We pray committing all stakeholders of the scheme into your hands. Grant us wisdom, understanding, and all the knowledge that we need to make the best decisions for the fund. Even as we leave this call to our various activities, we ask for your guidance and your protection through it all. We trust in your faithfulness that you will do it. And so we thank you in Jesus' name. Amen. On that note, thank you so much for joining us. See you again next year.